You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is October 21st, 2021, and it's time for another Triple Lutz Report, and this is episode number 488. Today, we'll be talking about inflation, non-transitory inflation. That's the subject. You've been hearing it. We've been making fun of the Fed all along for their Fed speak. They've been promising you, don't worry about inflation. It's transitory. Everything's going to be fine. Well, look, when you put $6 trillion into the money supply, into banks' hands, into individuals' hands, you're going to get inflation. There's just no two ways about it. And they have been lying through their teeth. They knew full well that inflation has been coming, but the really deep, dark, dirty secret is inflation never went away. We've had inflation since the Federal Reserve was created, really, certainly since World War I and certainly after World War II. During the Great Depression in the 30s, we had some deflation for sure. I remember my grandfather telling me a story that you went to the supermarket, they couldn't cash a $100 bill. You would have to go, effectively the banks wouldn't cash it because they thought you were a criminal. So you would give it to a person and they'd give you like $94 to $98 for a $100 bill, a money changer profit. That's deflation. We haven't experienced anything like that. Yes, I will say that over the past 5-6 years, the price of a Thanksgiving dinner, which is the true inflation measure that I've been watching, has barely budged. It's actually gone down a couple cents. Expect it to go way, way higher for this Thanksgiving. It's going to happen. We're seeing it all over. So I wrote an article that I'd like you to hear. The title is 10 Things About to Shoot Up in Price. And look, like I say, get ready for non-transitory inflation or intransitory inflation. So the first thing is electricity. In 2020, 38% of all NatGas used in the United States went towards generating electricity. There are currently 1,793 gas-powered electric plants in the U.S., and while utilities generally buy most of their nat gas through longer-term fixed-rate contracts, the low spot price that we experience on and off over the past decade, but certainly since 2015, has increasingly led utilities to purchase their gas on the spot market and decrease the length of their long-term contracts, because the longer term the contract is, the higher the price will be to help protect the producer and the pipeline company from taking a hit. So when you can buy for and save 25, 30% on the spot market, that's what you do. And that's what they have been doing. But the converse is when prices rapidly appreciate, you are then going to see that your costs of producing electricity are going to go up. And natural gas, it hit close to $6.50 per million BTUs, and higher electric rates are baked into the cake. You're going to see it. In the past 12 months, natural gas prices rose over 130%. So assuming a prolonged period of increased gas prices, electricity rates will soon start shooting higher. So heat's another thing that's going to get more expensive, way more expensive to heat your home. About half the homes in the U.S. use nat gas for space heating and hot water and cooking. The sector alone was responsible for 15% of nat gas consumption in 2020. For the same reasons that we outlined above, the decline of long-term fixed price supply contracts, prices are going to head higher. And the same thing if you use home heating oil or if you use electric. Either way, it's going up. Taxes, perfect example. Unbeknownst to many people, their largest annual expenditure, your largest annual expenditure is taxes. It's not just direct taxes like income, state, real estate, sales tax, but there's also indirect taxes levied by federal, state, and local governments upon a myriad of businesses and services that are totally hidden from you, the consumer, from your view. A large portion of federal, state, and local taxes, tolls. Your cell phone bill has state and local taxes. Your electric bill in New York State, 40% of your electric bill goes to taxes that are hidden, that are taxed on the utilities, and they pass it on to you. All of these things are going to go up. And tolls, like we already see them going up. Many of these government subdivisions, especially in the Northeast, the Midwest, California, employ expensive union-based labor. And as inflation escalates, these employees get automatic cost of living wage increases, COLAs, if you will. This will increase already staggering union pension costs and salaries. So therefore, governments across the board will be increasing their already high tax burden, and it will result in higher taxes on everything, even if they manage not to increase federal income taxes and capital gains taxes. So just be ready for a major upside surprise. Transportation. A large part of our personal budgets are consumed by getting from point A to point B. The cost of doing this has risen and will rise even higher, with gasoline prices up a whopping 85% and even higher in the past 12 months. Commuters are already feeling the bite, and politicians often increase gasoline sales and excise taxes when seeking more revenue. Same thing happens with liquor excise taxes as well. With electric vehicles expected to capture higher market share, these taxes will have to be raised to make up the difference. And like we said before, tolls are going up as well to pay for higher operating and labor costs in running and maintaining highways, bridges, and tunnels.
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near two producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold two companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Another one, appliances. As chip shortages continue, raw material costs rise, global labor costs take off to compensate for the near universal loss of purchasing power, appliance costs are going to increase greatly. The cost of repairing household appliances have already gone up substantially, and replacement parts have become scarce due to supply chain issues, which means that you are going to be replacing your appliances more often. And it's just baked into the cake. And in addition, poor economic conditions are reducing the number of outlets where appliances can be purchased. You used to have dozens and dozens of stores that sold appliances, local places, chains, everything else. Now you got like 3 big chains and a couple of locals. Your choices are way, way limited. The more consumer choices get limited, the more money you pay. So if you're thinking of buying that new refrigerator, maybe now is a good time. Automobiles. We've seen prices of both new and used vehicles have increased greatly during the past 12 months. Expect this trend to keep going for a long time to come. A large portion of the cost of an automobile is labor and legacy costs, and virtually all auto workers are unionized, except for Teslas, and they are currently or will shortly be receiving cost of living adjustments. Many auto retirees receive COLAs as part of their benefits as well. For legacy automakers, their cost structure is a straight line higher. Food, okay? Food is more serious, where you got to eat 3 times a day. If we don't, sometimes I eat 1 time a day. You got to eat. So you can expect food shortages. You've seen the shortages taking place, supply chain disruptions, weather issues, all driving food prices much higher in the months and years to come. There's a reason that the government excludes food prices from the consumer price index, and it's not because they're going down. Higher fuel costs also translate into higher food prices, as modern farming techniques require high energy usage. Not to mention, virtually all food produced must be shipped to market. Fertilizer, pesticides going right up, along with oil and natural gas, as natural gas for fertilizer is the main feedstock now, and for pesticides, petrochemicals derived from petroleum, those are going higher. Interest rates. For nearly 2 generations, interest rates have fallen to some of their lowest levels in several millennia, thousands of years. That's all coming to an end. The explosion of debt at every level, government, corporate, individual, has been well documented. We're not telling you anything you don't already know. Low rates are always dependent upon Fed policy. However, there is a limit to runaway money printing. At some point, probably sooner rather than later, the Fed will have to make a decision between the economy and the currency. They'll choose the currency and will have to raise rates, encounter massive debt defaults and a major deflationary cycle that will usher in an era of higher real rates. And that's what we're talking about. Right now, interest rates are negative for most things because inflation by some accounts is running as high as 14%. If you look at John Williams' shadow stats, and he seems to be the gold standard. Another thing, precious metals for thousands of years, gold and silver have been real money. It's only since the advent of unlimited fiat currency that they've been forced to take a backseat to paper forms of wealth. Since 1971, when Nixon closed the gold window, the paper wealth orgy has continued on unabated. Now it appears that the can has been kicked down the road as far as possible, and the day of reckoning is nearly at hand. The golden rule will again reign supreme. He who has the gold makes the rules. Whether the nominal price of gold increases or not, the real value is due to make a tremendous move forward. Finally, guns and ammo. Since 2008, the demand for guns and ammunition, that was the time of the financial crisis, collapse, has been nearly insatiable. As the world has gotten deeper into an endless morass of debt and loss of freedom, U.S. sales of these essential self-defense products have catapulted forward. The new inflationary trend will increasingly weaken the ability of government to protect you, its citizens. As Americans, we've been lulled into a false sense of security that government can actually keep us safe. Moving ahead, this illusion is rapidly fading. Witness the 2020 widespread urban riots. As more dangerous cities and states become the norm, people will increasingly ignore draconian gun control measures and take whatever steps are necessary to protect their families and themselves. It's going to be a glorious time to be a gun dealer, and it already has been. For the most part, these trends are inexorable. As Nick Santiago is fond of saying, the trend is your friend until the end. Low consumer prices, low taxes, abundant consumer goods, low interest rates, and low energy prices are coming to an end. The only question is what you are going to do to protect yourself and your family. That's where financialsurvivalnetwork.com can help. We've been ahead of the curve and ahead of the trend for over a decade, and we're still looking ahead and providing common sense solutions to nearly impossible problems. That's it for now. This has been another Triple Lutz Report. Kerry Lutz, signing off.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.